All right, everyone. Today is the big day where we get GDP and we also get PCE. So we get to set up our next play structure that we have. I have long positions, I have long trades, I have some short hedges that are out there as well, ready to go for whichever way this market happens to fall off that seesaw one way or the other. Are we going to lean into economic strength? Fingers crossed that we do. Or is it something that we're going to have to take a look at and seriously consider the idea that recession is upon us? We're going to take a look at the information that we have. I have some things to share with you on the screen here. I do just want to let you know, somebody asked me where I keep all my dad jokes. I store them in my database. So with that said, let's jump over into the charts that we have here, kicking things off with the CME Fed Watch tool. And for the May meeting, which is coming up for us on May 7th, is when we get the conclusion to that. Today's April 30th, so that's 1 week from today. So that means Wednesday of next week. It's right now nearly no chance, according to the bond market, that the Fed is going to cut whatsoever. If we go out to June, 60% chance that in June is when we get that first 25 basis point cut. If we go out to July, where does that put us? They actually, right now, half a chance or over half a chance that we see a second 25 basis point cut. September, I think, is an important time for us because usually the market's not doing so hot in September. And where does September have us? Pretty much where July does. Just jumping out to December real quick here before we move on. December, where we were, well, if we go back to 1 month ago, we were looking at 325 basis points cuts. And now we have the highest peak for this thing, looking at, well, a full 425 basis point cuts. And when you add up all of these bars that we have on here, that adds up to be over 50%. As a matter of fact, it adds up to being over 60% chance that we get that. So with GDP, with the Atlanta, actually, let's take a look at the Atlanta Fed. There we go, GDP now, to see what exactly we got going on. Same thing as yesterday. We should get this information maybe at 8:30. I don't know exactly what time it updates, but we have to watch and see what they're saying for Q2 because this is still all Q1. You can see it going from the end of December up through, there we go, the end of April for these dates. Now, mind you, this is just collecting information starting in Q1, which would be January 1st, but we get that information from March throughout April, and that's why you see April here as well. And by the way, just below that, if you go to release dates, you can see the dates of the different information coming out. So if we go to the 30th, that's where you see the initial nowcast for Q2 GDP growth for personal income and outlays and the things that tie into it. So PCE at 10 o'clock is going to tie into it. So I'm guessing probably around the, oh, there you go. They got it. 10 a.m. for us. It's already time-stamped. It's ready to go. By the way, on the earnings calendar, Microsoft, Meta, Qualcomm, Caterpillar already reported EPS of $4.25, which is down about $1 from what they normally put out there. And they said that private inventories were something that affected that one. So maybe they just couldn't sell as much to bring in the $15, $16, $17 billion in revenue, and that affect their earnings per share. It is odd for Caterpillar to have that. Now, mind you, if you look at their stock price, it is something that was anticipated that was to take place. So let's bring this up here. By the way, about $3.5 billion in share buybacks for Caterpillar. And I wouldn't be surprised if we had other companies doing share buybacks as well, such as NVIDIA, for example, has a whole ton of cash ready to go in the event that they have to do those share buybacks as well. And that's something that they'll just continue to do over time. Last I saw, I think it was $50 billion available for share buybacks. And I think they only spent some of that so far. So let's go over to the Qs. You can see that we're pulled right back down to that 50 EMA, which is this red line coming down here. Let's take some of the other lines off. And like I said, we'd be set up for that. The market ready to go, ready to fall in either direction. Same thing for SPY. Let's put up the EMAs on this one. Take down the SMAs. There we go. Boom. That's off there for us. And the pre-market actually has us just down a little bit from that EMA, but not too much. Once again, ready to go in either direction. IWM actually outperforming SPY and QQQ, the S&P 500 ETF and the NASDAQ 100 ETF. And the pre-market actually up just a little bit, kind of pushing on that white line. We'll see. But I think this is that teetering moment for IWM as well. That, remember the 4 pillars that I talked about in my previous videos. So GDP, we want that to be high. So hopefully not negative. We're looking for positive numbers this time. Hopefully we get forecast or a beat on the consensus estimate of 0.4%. And then also we want subdued inflation, easy monetary policy, and then stable employment. And so moving over to Bitcoin, where does Bitcoin put us right now? Bitcoin actually has a little bit of a a bull pennant kind of look to us. My goodness, if those aren't opposites. So we have the flagpole right here, and then what you might notice, let me take these down, is that you can see the tapering of the prices where the bears are holding the line across the top. The bulls are pushing the line across the bottom of this thing. We're sitting on top of the 5 EMA. The RSI is ripe. Volumes are tapering off exactly like we would want. Bitcoin is just looking for that next permission to finally push and sit a candle on top of the 95,118, and that would allow us to be catalyzed up to about 98.4, almost 98.5. And if we can push that, and I do believe that we can push that, this flagpole that we have right here should be enough to push us up to the $100,000 mark if we can sit on top of that. I do have a call option out. By the way, I put up my buys and sells over at the Discord. The link's down in the description if you want to check it out. We got thousands of members over there. Me and the other expert panelists that are over there, all part of the same Discord. Stockmo's there, Crypto Will, myself, some other ones that we have as well. Small Dog is probably one of my favorite names that's over there. So guys, check it out. We've got tons of products, services, Breadbot, AI tool, advanced charting tools, options chat. We have stock chat. We have people talking about the bond market as well. Crypto, you name it. It's there. It's ready to go. So for Bitcoin, we could have that breakout moment sometime soon. We'll be watchful for that. And honestly, good or bad GDP could honestly either way have its effect on Bitcoin. That still allows it to be bullish. I talked about that in yesterday's video. Go back and watch that one. It's a good one. XRP still kind of floundering around right now, waiting for that next catalyzing moment, sitting still on top of the 50. Let me take down the technicals just for a moment because you can see this red 50 EMA still sitting on top. Kind of losing the 5 EMA, which could be some near-term weakness. We want to watch for that, but the RSI still up above 50. We're still looking very bullish to this, up above the 50 and the 13 as well. If we can get the 13 to cross, that's this yellow one, cross up over the 50, that could put us in very good shape. Tesla, I think, is going to be a very big mover for us. Either way, in either direction, regardless of what we get for GDP, I think we're either going to have a strong move down or we get that strong move up. I'm hoping that we get that strong move up because that could set us up for this 50 to turn back around and cross over the 200-day and give us that next big push up. And if we get that move, that golden cross move sitting on top the 200-day, that puts us back in bullish territory for Tesla from a longer term perspective. We're up above the 20, the 50, and fighting with the 200-day. Sitting on top of that would put us above all three of those moving averages. Then we just want to see 20 cross 50, 50 cross the 200. 20 cross the 200 is also a good thing, by the way. When you see the faster ones, faster moving averages above the slower moving averages, that is a bullish thing. It's bearish to actually see this setup right now where you see the slower moving averages above the faster moving averages. The mixed message that we get right now is with that price action. Down when it was below the moving averages, that's a bearish thing like you see here, especially when we dip down below the 200. But for right now, still down below the 200. We closed above it going all the way back to March 25th, but we haven't closed above the 200-day since, still putting us in bearish territory. Once again, ready to go in either direction. This is absolutely one that I am watching. And TMF, I should also lump into this. We're above the 50 EMA, which is this red line that we have crossing right through here, and we're above the 5 and the 13. 5 crossing 50, good thing. 13 crossing 50, a great thing. RSI up above 50 as well. And so we can see that there's a lot of preparation here by the markets ready to move on whatever information that we get. TMF could benefit if we get subdued inflation and if we have low or even negative GDP. We could see that move up for TMF as well. And like I said, for Tesla, that could be played really in either direction based on the information that we get. It's either, in my opinion, going to be something that would be wildly bullish for us that we could see significant upside from where we're at right now. It probably in the 2-digit percent, 10 to 20% range. And if instead it gets rejected off the 200-day and we get some bad news for the economy, instead of, if it's looking like recession, we can then play it to the downside on that and look for those massive areas of support, such as where we had that most recent bottom as all that negative news was coming out about Tesla, and the sentiment was that it's, we'll call it relatively near-term most negative sentiment. So guys, thank you very much for watching, and just keep an eye on this channel. I'll keep on coming back to YouTube. Subscribe if you haven't. That's down there for you just below this video. Also down there is In the description, not only do I have link for the Discord, which sign up for the earner tier so you get unrestricted access to everything we have to offer, but if you want to learn technical analysis, if you want to learn about how to use the bread recipe for trading like I use in my trades that I make to talk in my videos, I talk about it as well. And then also options is usually what I use to build the alpha in my portfolio. There's coursework for that. You can click on that link for Stockmo Academy. You get access to both those courses through that link. And if you bundle those courses, you can save a ton. And if you use code word doctor for whatever it is you sign up for those courses, that's going to save you a ton more. Guys, thank you very much for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.